One of the hottest topics around today is the pending federal tax reform and what that means for pro-business tax credits and incentives, especially at the state and local level.
U.S. tax incentives are very timely right now because of the proposed agenda of President Trump, both from a tax policy perspective as well as a regulatory policy perspective.
Specifically, the federal tax policy changes that could incentivize growth in the U.S. include reducing the top-line rate, going to a territorial regime, and incentivizing R&D activity in the U.S.
In addition to this, it has been implied that for companies that rely on government contracts, it would be a better thing for them to manufacture and produce their product in the United States, and companies are reacting to that.
The anticipated changes have already sparked enthusiasm and interest in economic incentives because the proposals could have profound impact on business operations, investment, and trade.
There's a proposal that's still on the table, which is to propose or imply or impose a deemed repatriation tax of 10% on untaxed foreign earnings. Now, what this could do is once that tax is imposed and paid, it would free up this money to come back into the United States and potentially wind up in the creation of new jobs, investment in capital projects, and investment in things like R&D and other activities that are highly incentivized.
Part of that strategy is resulting in a new look at a host of economic incentives supporting inward investment and M&A activity.
Incentives can affect M&A activity by enhancing value, whether viewed as an alternative source of financing or reducing the overall cost of a business.
Some of the most common types of incentives are cash grants, either for job creation, for training. Property tax abatements are very lucrative. Utility rate discounts, tax credits, tax holidays. Maybe if you need a road to your facility, you need a stoplight, you need an alternative power source. All of these items can be negotiated for when looking to put up a substantial project.
Investment in people, capital projects, R&D, clean energy, transportation, and government-sponsored projects all may offer incentives. But many business people lose out on these opportunities because they don't know what incentives may be available to them or how to ask for them.
There have been studies out there that say that companies lose almost 50% of the incentives that they negotiate for many, many reasons. So what we do is we help companies ensure that they're maximizing and getting the benefit of the incentives that they've previously claimed.
Another way we assist companies in securing incentives is helping them establish a best practice plan to ensure that they maintain the requirements necessary to earn the incentives. In addition, we can help companies go through the fine print associated with incentive agreements and give them perspective on provisions that should be changed.
So very often what we'll be doing is helping companies decide within the 50 states where they should actually locate. Whenever a company is looking to locate a facility within the United States, they should be looking for incentives.